from the close of trading here in the U.S. Live from Bloomberg's World Headquarters in New York, I'm Scarlet Fu.
I'm Amanda Lang.
And I'm Oliver Rennick. U.S. stocks falling with consumer discretionary shares leading losses after a string of disappointing earnings reports.
But the question is, what'd you miss? Call it the calm before the storm. Markets around the world, from stocks to metals and bonds, have slowed to a crawl, revisiting lows in volatility that have stood for 2 years. What are investors waiting for? In about an hour, we'll get an update on Apple and whether sales of its newest phone, the iPhone 7, will help end its earnings recession. And after unsuccessful attempts to sell itself, Twitter could be slimming down its workforce. All of this ahead of its earnings report on Thursday.
As we head towards the close, let's take a check on where the major averages stand here in the U.S. And you can see, although we did see declines across the board, we didn't see major declines. And the story today seems to be not a lot of volatility, a bit of treading water. That's true for stocks. It's been true for bonds as we kind of settle in towards that election. We did get some negative news, though, on the consumer side, confidence numbers down and some consumer staple stocks disappointing. And that's weighing on parts of this market. Let's get over to the NASDAQ now and check in with Abigail Doolittle for what's happening there. Abigail?
Hi there, Amanda. Well, we are looking at a decent pullback for the NASDAQ today. This follows yesterday's big 1% rally for the composite index. And in fact, yesterday, the NASDAQ 100 put in a new record close. So some consolidation of those gains. And the drag today really is coming down to technology and the mega caps. The biggest drags include Alphabet, Facebook, and Amazon. Perhaps as investors are a little bit uncertain ahead of the earnings reports for those companies this week and next week. Speaking of earnings reports, the big one, of course, is today after the close. Apple. Investors are eagerly awaiting this one that is sort of a reset of expectations. In the beginning of the year, expectations for Apple were very low as demand for the iPhone 6s was weak and revenues declined for the first time in more than a decade. Then we had that better than expected low bar quarter back in June. Now, many investors and watchers seem to think that Apple is back. In fact, most analysts on the street are pretty optimistic about the upcoming quarter and the guide. We have Goldman Sachs saying that they expect a, quote, beat and raise quarter. Wells Fargo has the same view. Now, interesting, one outlier, Rod Hall over at JP Morgan. Now, he is bullish on the shares, but for the December quarter, he thinks that the guidance for the iPhone units could fall a bit short of what the street's looking for. The street for this upcoming quarter to be reported tonight, 45 million iPhone units. For the December quarter, looking for about 75 million units. Rod Hall's looking for 72 million units, iPhone units, in that December quarter. But there's other analysts who are looking for well above that consensus. So that guide on the iPhone demand for the December quarter really could be the key for the stock going into the end of the year, Amanda, whether or not it hits that 75 million iPhone unit or falls short or exceeds.
All about the upgrade cycle, right, from the 6 to the 7. So, Abigail, have there been other moments like this in past quarters where there was this important a juncture on upgrade?
Well, interestingly, yes. When we go into the Bloomberg and we take a look at G hashtag BTV 3563, this is a longer-term chart of Apple. And the period that is very reminiscent of the current period was back in 2012 and 2013. The stock took a big decline. That was around disappointment on the iPhone 5 into the 5S. And then we had this big return where the 5S really started to exceed expectations. So we had the 6S disappointing. Now the reports, the early reports of the demand for the iPhone 7 could be better than expected. We see the big move up. The one thing to note here is there was a period of consolidation after initial gains from the decline. So it wouldn't be surprising here if Apple does get a little bit bumpy for a little while. But this chart would suggest that over the medium to long term, Apple may be trading higher.
Abigail Doolittle at the NASDAQ. Thanks.
What'd you miss? Job cuts on the way at Twitter. The company may eliminate around 300 jobs, about 8% of its workforce. That's according to people familiar with the matter. This comes after the company has struggled this year with an absence of growth and a declining stock price. For more on that analysis, we bring in Paul Sweeney. He's Bloomberg Intelligence Director of North America. So, Paul, when we look at this company, there's obviously a lot of things not going its way. Are we witnessing the sort of slow dismantling of an institution, or is this part of a very slow kind of turnaround?
No, I think we're on a kind of a downward trajectory here with the company. We've seen the revenue growth for this company slow pretty substantially over the last couple of years, and that's pretty much because the user growth for this company has pretty much plateaued at a little over 310 million users. And this is a company, this is an internet company that's really looking to scale its growth, and really the fundamental pillar for growing the company is growing your user base. That attracts advertisers, that drives revenue growth, and that drives profitability. Unfortunately, this is a company, unlike another social media company such as Facebook, where the growth has really slowed. And so the question is, Does this management team have what it takes to turn it around, or should the company be sold? We've been down both paths over the last few weeks with really no end in sight, quite frankly.
But the only thing worse, of course, than having a fire sale for yourself is having a fire sale that nobody shows up to.
Right.
And Twitter, I mean, it's eerily, ominously reminiscent to me of BlackBerry, where it was on the block, and in the end, people said, we're going to take a pass. Is that likely to happen here, or will a SoftBank actually emerge out of the woodwork?
You know, I think perhaps at a certain price, maybe at a lower price, there'll be some interest here. But clearly, the company was shopped really over the last several weeks. There are some strategic buyers, such as Salesforce.com, such as Google, maybe even Disney on the media side, maybe even some private equity firms took a look at this company. Because when you think about social media platforms out there aren't that many. And so when you take a look at Twitter, there are 300 million users. Presumably in somebody else's hands, there would be value, yet there were no takers, certainly not at that price. So the question remains, to the extent that the business continues to erode, and we'll get earnings Thursday, if the business continues to erode, presumably that'll lower the value, that may attract some more interest.
So in the meantime, the company is doing what it can, controlling costs by firing workers. Twitter's unprofitable. Is there a path to profitability here for the company?
We typically don't find that in technology companies. They typically don't have it in their DNA to cut costs to get to profitability. The way tech companies typically scale to profitability is by growing the top line very rapidly. They're not known for really managing costs. This is an industry that pays a tremendous amount of stock-based compensation to their employees, and that is all dependent upon the stock going up so that you can retain employees and attract new employees. So it's kind of a vicious circle when the growth kind of rolls over, and that's kind of where Twitter is here. So it's typically going to be a situation they can either fix the top line story, the user growth, or they can't, in which case then there's a whole different story here for this company.
Paul, if we can jump into the terminal real quick, I just want to bring up a fundamental graph here on some of Twitter's properties. This is looking at the margin where you're showing a yearly change for each quarter, where there's been some improvement on this part. When I think about job cuts and I think about firing, I think about improving margins. How far is this going to get them to where they need to shave off some of the losses that they're experiencing?
Right. Well, this is something I think in the face of a slowing revenue growth that they have no choice. Again, it's the antithesis of what you typically like to see in Silicon Valley. It sends a very poor signal to the rest of the valley in terms of attracting and retaining talent, and in terms of really positioning yourself as a growth advertising medium to advertisers. But it's something they have to do. It's clearly a short-term cash flow management issue for this company, because if you take a look at the consensus estimates out on the street, revenue growth continues to slow down. So I think the company has to step back and say, listen, if that is in fact the scenario that we're faced with, we have to manage our costs much more aggressively.
So in this case, I mean, the barrier to entry into its space was always low. Somebody else could get into messaging, and somebody else did in droves. So if you're a betting man, would you say that in the end this is a standalone entity that manages to find the goodwill and user base again, or does it fade off into somebody else's arms? Yeah,
I think this is an asset that probably belongs with somebody else. We had the founder of the company, Jack Dorsey, come back in about a year ago. His mandate was to try to reignite user growth, either through some technological changes, some marketing changes, some product changes.
Or sheer force of personality.
Sheer force of personality, or half a personality. The other half is at Square. But we just haven't seen the turnaround yet. So I think most people look at this asset as it has value, just not with this current structure, this current management team, maybe with somebody else with a bigger platform bolted on, maybe there'd be a way to grow the business.
All right, Paul, very helpful as always, talking about Twitter, which is now down over 4%. Seems like a big move, but when you look at some of the declines the past couple of weeks, it's just right on track with some of the big losses it's seen. It's Paul Sweeney, Director of North American Research at Bloomberg Intelligence.
Coming up, we're going to be speaking to one of the lead economists on the subject of global inequality, Professor Branko Milanovic. Hear what he has to say about what governments can do to support the losers of globalization. Plus, much more coming up from Bloomberg's The Year Ahead conference here in New York. Paul Tudor Jones will be sitting down with Bloomberg's David Weston at the top of the hour. This is Bloomberg. Scarlet Food. It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. Billionaire Sumner Redstone is suing two of his former girlfriends over the millions of dollars that he lavished on them. Redstone claims that the women committed elder abuse. The 93-year-old media mogul is seeking more than $150 million in damages from Manuela Hertzer and Sydney Holland in a complaint filed today. The women have not commented. Apple is said to have dozens of software engineers in Canada building a car operating system. That's according to people familiar with the matter who declined to be named. It is a rare move for a company that typically sticks close to its California headquarters. Many of the engineers working in Canada were hired over the past year, and about 24 came from BlackBerry's QNX, which is a leading automotive software provider. Chevron is expected to decide this week whether its 28-year string of annual dividend increases will continue. The energy producer has pledged to shield investor payouts, but with the worst oil slump in a generation, the company has outspent cash flow for 4 straight years. Chevron's board historically announces quarterly dividends 2 days before earnings, which would mean any change would come tomorrow. And that is your Business Flash update.
So what'd you miss? Over the past 10 years, the world has seen income inequality rise in almost all developed nations. That might explain some of today's geopolitical events, the Brexit vote, the success of U.S. populists, and the rise of separatist movements in Europe. Our next guest says, though, that in the last 2 to 3 years, income inequality in many countries is actually stalling, and it has the potential to decrease. With us now is the leading scholar on the subject, Branko Milanovic. He's a CUNY Graduate Center visiting prof and former World Bank lead economist. Great to have you here.
Very nice to have you. To have me, rather. The
unfortunate theme that you've explored many times of globalization was that while it did lift up the wealthy and it did increase corporate profits, it left a key group out, and that group is now acting out around the world. And that isn't just the poorest of the poor, but it's this band of middle class. Why is that stalling at the moment? What's changed about that story?
You know, what happened, actually, as you said, over the last 20 years, globalization has lifted actually everybody practically up. But there was one group, also there was a group of very poor who actually did not gain that much. But the group that really did not gain much were the people who, in a global sense, were kind of upper class, upper middle class, but they, in their own countries, because these are the people from the rich countries, they were lower middle class in those countries. Obviously, U.S. is a prime example, but as you mentioned, there are other examples like in Western Europe, where actually, similarly, these groups of people have not done very well.
And, of course, this is all encapsulated in your famous elephant chart, if we can pull that up right now, which really shows the lack of real wage increase for a significant portion of the population. This, let's call it the 80th percentile. That would be the middle class in the rich nations, right?
That would be actually sort of lower middle class or beginning of the middle class in rich nations. So as you can see on that chart, actually, these guys are, globally speaking, not really poor. They're around the 80th percentile of the world. But in their own countries, they're in the lower part of the income distribution. So that's where the problem begins.
When you talk about sort of the way to sort of combat this inequality, I think for a long time, the assumption was that you have these Western powers that do have the most strength, influence around the world, and their sort of model for combating it can serve around the world. Is that still the case? Do we need to rethink how we apply that?
Well, basically, I would say it's still the case, because the most powerful countries are obviously the U.S. and European countries, and they are the richest. But on the other hand, the success of China makes some people sort of reconsider what one can learn from China, because it is an incredible success which has now lasted almost for 4 decades. And lifted not only people out of poverty, but now made China sort of upper, middle-class country with potential to become actually upper middle class and actually rich country. I often mention to the people that China now has the income level of the poorest EU countries. But if you take urban China, they are actually towards the middle of the EU. So this is a great success, and maybe makes somebody sort of think about what the rest of the world can learn from China.
That's a really good point, and I think it's something that's often overlooked, which is that as global inequality rises, we're actually seeing inequality within China increase as well. It just doesn't get as much play. In fact, Chinese President Xi Jinping talked about that a little bit. He addressed it obliquely in talking about the global inequality with the Gini coefficient. You thought that was novel, that he brought up global inequality, because it's something that typically leaders don't discuss in that context.
Yeah, it was absolutely novel. I think it's the first time that even at such level of meetings, you had the words of global inequality had been used. Moreover, actually, President Xi mentioned a number, which is even more unusual, because people talk about inequality in broad terms. They don't put a number on it. So I think it was a very interesting development, and I believe actually it is very unique because it essentially shows sort of a, how should I say, globalized picture of the world. In other words, when we talk about global inequality, implicitly we treat every individual in the world as equally important. And that was something new.
So when you look at the elephant chart,
right,
globalization did what arguably and even morally it was supposed to do. It lifted up the poor, and there was a price to pay. And the relatively wealthy, the middle class and rich nations, stayed relatively wealthy.
That's true.
However, the real problem that has that group really upset is what happens in the 95th and up percentile. The wealthiest got disproportionately wealthier. Are they right, Branko, to say no more globalization? Are they right to say no to CETA, no to TPP, to bring tariffs back, all of the things you're seeing as an angry reaction to this?
Well, I would say that they are not right on that, in the sense that I don't believe that such policies would actually help their position. I think that actually such kind of self-defeating policies would further erode their position. However, I agree that actually they do have a cause for grievance or for lack of, let's suppose, satisfaction, not only because they can see that their incomes have stalled while the incomes of, middle class in Asia have gone up, but more important, as you mentioned, that actually the incomes of the top 1% in their own countries have actually increased a lot. So I understand the grievance, but I don't believe that the policies that some of them suggest would make sense.
Well, I think that's a great point that Amanda brings up, because there are these sort of two forces here. One is this sort of disenfranchised
right,
part of the world community. In America right now, we're experiencing it in the election. But then there's also the global fight against inequality. Are the elected officials, whether it's Clinton, whether it's Trump, in Europe as well, the fact that they're going to have to try and accommodate those people that are so upset, is that going to delay the greater progress on the sort of global inequality scale?
Well, it's a very good question. It's very tough to answer that question. I do believe, however, and going back to actually our original question, I do believe that there is much greater sort of conscience now and awareness of the importance of inequality. And actually, I think partly, and ironically, it is because these people have acted out. So we have seen that in Brexit, in the populist movements in Europe, in Trump, in this country. So I'm somewhat optimistic that actually the new administration in the US, and I think new administrations, different governments like Theresa May in the UK, would actually take inequality domestically much more seriously than before. So in that sense, I'm optimistic, and that's maybe why we're seeing that stalling of further increase that we mentioned in the beginning.
Branko, always good to have your thoughts on this as one of the leading experts. Branko Milanovic is going to stay with us, author and CUNY graduate, prof, visiting prof, former lead bank economist. Stick with us as we discuss the euro, world debt, and politics after this. And, of course, we're still watching Apple. It reports after the bell. Hasn't moved much today, but we'll see what happens next. This is Bloomberg.
Scarlet Fu. We're back with Branko Milanovic. He's a former lead economist at the World Bank and current visiting professor at CUNY Graduate Center of Socioeconomic Inequality, and he's an expert on that topic. I want to get us started with a chart of euro dollar. If you come inside the Bloomberg and you take a look, euro dollar is the white line here, and it has dipped below the year-end forecast for the currency pair in a Bloomberg survey. The forecast calls for euro dollar to be at 110 by the end of 2016. Euro dollar currently at 108.86. It had been stuck in a range in the third quarter, July through September, but it's really broken out and fallen below that average year-end forecast. And this is, of course, as investors increasingly expect the ECB to extend QE in December, right around the time when the Fed will likely raise interest rates. So policy divergence.
It's really interesting because you're beginning to hear actually talk by central bankers and other policymakers of a coordinated effort to normalize it. We have to get rates back up. And yet there are still these regions of the world where they really aren't going that way. And that, of course, has had people fleeing for yield. For a long time, the trend has been, of course, out to the end of the yield curve. The danger is that crowded trade is now looking like it's going to go the other way. So have a look, first of all, at just the sheer volume of government bonds that are 10 years plus in duration. You can see 2016, a record $733 billion this year alone. That's more than doubled. It's now a total of $6 trillion of paper out there. Why does that matter? Well, here's a number that might grab your attention. A 1% increase in rates will shave $2.1 trillion off of global investments, $2.1 trillion in losses to global investors. So there's also, of course, the long-term structural issues that you could talk about of government indebtedness. This will all roll over one day, and it'll roll over arguably at very much higher rates.
These are great sort of global economic charts. I'm going to do one more here that shows sort of a news trend. This is using Intigo on Bloomberg. We're looking at what we were just talking about. We're going to bring in Branko to get his thoughts on this. This is just the instances, looking at monthly here since the beginning of the year, of the terms trade and TPP. You can really throw anything in here. You can throw in, let's toss in NAFTA and see what it looks like. Obviously, the last couple months is taking a pretty big tick up. So here's what I want to bring in Branko to kind of reassess what we were just discussing and take it to the next step here, because clearly these topics, Branko, are becoming very prevalent in the presidential race. Regardless of who wins, what can be done and what needs to be done here in the U.S. to lead this fight against global inequality?
Well, you know, of course, the U.S. really needs to lead the fight against U.S. inequality first, because obviously the tools that the U.S. government has are the tools about national inequality. So I believe that actually whoever wins the next election is going to pay much more attention to U.S. inequality and to all these people who, with some good reasons, as we were saying before, have the case to be sort of feeling, you know, unhappy with the way that it has, that things have evolved in the last 20, 25 years. So in that sense, I'm quite optimistic. And there are actually measures, I mean, including infrastructure, of course, that everybody talks about, you know, unemployment benefits, greater redistribution. There are measures to actually help. And, of course, education, which is really crucial.
So the tools there, just quickly, will they get used?
I think the tools are there. You know, there is a certain amount of consensus that actually that things can be done.
Okay, great. Thanks a lot.
All right, Branko Milanovic, author and professor at CUNY Center on Socioeconomic Inequality. Moments away from the closing bell. What'd you miss? U.S. stocks slipping from a 2-week high as disappointing outlooks from Caterpillar to 3M weighed on investor sentiment. Oil also dropping as much as 1.5% in New York. I'm Scarlet Fu.
I'm Amanda Lang.
And I'm Oliver Rennick. And welcome to our followers from Twitter, where you can tune in live every day for our closing market coverage from 4 to 5 p.m. Eastern.
We begin with our market minutes. U.S. stocks sagging into the close. They fall as Apple gets ready to report earnings in just about 30 minutes time. For the S&P 500, this was the worst day in 2 weeks. And, of course, it pushes the S&P 500 off a 2-week high as well. If you look at the different sector groups, Oliver and Amanda, 9 out of 11 major groups in the benchmark index fell.
Yikes, not a great day, and some of the old laggards that were weak before were weak again today. But I want to start off by looking at some of those sectors and stocks here, just because there were some pretty big movers on the day. But ultimately, let's start from the sector level. Consumer discretionary shares lagging the most. There were some pretty big laggards in there, big moves down, a couple companies down, a couple standard deviations. So just a lot of red on the screen. Materials not doing as well either. Yeah, the Bloomberg Commodity Index ticking down a tad bit as well today, so obviously not helping that group. The only one of the few groups that was doing okay was utilities. So you kind of saw the perhaps the dividend trade back on there. They had seen a little bit of weakness over the past couple of weeks, so a bit of a reversal there. And then just a couple specific stocks that were moving. I want to highlight Procter & Gamble as well as Under Armour and GM. Under Armour just getting really whacked today, down more than 13%. Worst stock decline in more than 7 years. Their long-term forecast a little bit worse than expectations. GM in the auto space not doing as well either. Their volume there was massive, about 200% more than the 30-day average in the auto space. And P&G, on the other hand, just because we'll throw in some positive news, doing pretty well. Looks like they are going to sort of revive their sales. That was the headline on that today. And then finally, real quickly, the BNP Paribas Love Panic Index, the best ticker on the Bloomberg I Love US. Vacillating around 0. It got up close to there, but overall a tick down with people feeling a little bit more bearish on the U.S. equity market.
All right, talking about all of that long-term paper out there, have a look at bonds today, some of the fixed income that we cover regularly. Here's the U.S. 10-year. I want to show you, though, UK, the gilts falling today. Yields were climbing, and this is as we had Mark Carney testifying in the House of Lords. Some question about whether or not we would learn his fate. Would he leave early in his term? He said that's a personal decision. No answer to that, and no policy change whatsoever or should be implied. But I want to show you something else, and this is the volatility of treasuries. U.S. Treasury volatility now at the lowest level since 2014. This is expected price swings in treasuries that you're looking at, and it is at the lowest level as essentially we know that next week's meeting of the Fed will do nothing. People now looking ahead to December, 17% expectation of a move there, 80% expectation into next year, but pretty firm that we're going to tread sideways.
Tread sideways is a really nice way of putting it. You could just see that volatility come down, down, down. A lot of two-way moves in the major FX pairs today. You talked about gilt. I want to focus on the pound here because it initially sold off as the dollar climbed in value, but it paired losses as treasuries gained, but also as the Bank of England Governor Mark Carney said there are limits to policymakers' willingness to look through an inflation overshoot. So for some people, that suggested that looser monetary policy is not a given. A rate increase could be necessary. Also, let's move to the emerging markets. The Chilean peso headed for its biggest two-day gain in 4 months. Two reasons why. You had a surge in copper prices and, of course, speculation of a change in government next year. There are some mayoral elections over the weekend. The opposition coalition did better than the ruling coalition, so that could point to a more market-friendly government in next year's presidential election. So you're seeing there the dollar decline almost 2% versus the Chilean peso over the last 2 days.
All right, and turning to commodities here, we've been talking about oil. We get a read on inventories tomorrow. And, of course, we've seen this divergence between supply and demand. One of the big issues has been whether OPEC, namely Saudi Arabia, would be able to rally and keep a lid on output. And the answer seems to be no. Iraq, Iran, Russia, all playing by their own rules. And now there is increasing speculation that OPEC will try to pressure U.S. shale producers to try to put a lid on production. Unlikely to happen. And I think what we'll see tomorrow in inventories, the expectation is of an increase, so more downward pressure on the price of oil here.
All right, you know who might not be getting pressured and holding their own ground is Russia in terms of oil output. So I want to show you this chart here, as there was a pretty substantial move in oil today. The blue line here is looking at where oil is. The white line is looking at Russian crude output. This number is obviously pretty high. This is looking at a monthly chart, so you're not seeing today's downturn in oil. But just to highlight what's happening in terms of the output there, there's speculation here that even if there is an OPEC agreement or some kind of settlement on production, that perhaps Russia's going to be doing their own thing, keeping those really high levels, keeping that supply up, which of course is not going to be constructive to the price.
Fascinating. It was so simple when it was just one cartel controlling the price. Let's turn here to one commodity that was jumping off the screen today, and that's coffee, namely Arabica. If you drink at Starbucks, you're part of the deal here, because that's the coffee favored by Starbucks. The issue here, drought conditions, rising consumption in South America, and you can see here that one is off the chart today in terms of 40% higher. How soon before that winds up in your cup on a higher price?
And who says there's no inflation, right? All right, those are today's market minutes. I want to get now to some breaking news. We have Pandora reporting earnings, the online radio channel. Is that the way to call it? Online radio channel, radio station? Right. Yeah. In any case, it reported results that missed analyst estimates. Third quarter sales, for instance, coming in at $352 million. If you round it up, analysts were looking for $366 million. For the third quarter, there was an adjusted EBITDA loss of $6.6 million as well. The outlook is not much better either, because when you look at that, fourth quarter revenue missing the average analyst estimate, full year revenue also coming in a little bit shy of what analysts were anticipating as well. As for the actual adjusted loss per share for the third quarter, that was 7 cents, and analysts were looking for 7 cents. So at the very best, it met analyst estimates. In other ways, in other metrics, it fell shy of what analysts were looking for, and no surprise, the stock is down by better than 4% now.
And of course, trading. We saw this whole category suffer starting yesterday on the Time Warner deal, both of those stocks falling. And some of the speculation is that now this is a category that is moving into cyclically weak period. They're obviously in very different kinds of businesses, but out of favor today for sure. So this may also be a bad timing issue for Pandora, as it reports.
Great point.
And I was also just going to say, in terms of their earnings-related moves, this is actually, if it doesn't do well, then it's kind of vacillating around a little bit down in the aftermarket, but ultimately, it usually does pretty well the past couple quarters, so this will be a different change. And we're also got a lot of other earnings going on, so we're right in the thick of the season. Coming up this hour, we're going to look at Chipotle, and we're going to look at Apple, of course. We'll bring you those numbers as soon as they cross. This is Bloomberg.
We take you now to the Year Ahead conference happening right now at the Park Hyatt in New York. Bloomberg's David Weston is speaking with Tudor Investment founder Paul Tudor Jones.
University, and he was a student, Deepak Chopra. You may know Deepak Chopra's class, and I got to know Deepak about 5 or 6 years ago. I thought he had really cool glasses with the diamonds right there, but we got to be great friends. He taught me how to meditate. One day he calls me up, he goes, I've got this student who has this idea. He calls it just capital, where corporations use capital not just to create profits, but to create justness. And I don't know how to necessarily what to do. Maybe you could get some of your friends on Wall Street and help us think this through. So that was the genesis of it. And I did it kind of as a favor to Deepak to have this meeting. And as we got into it, it became really, really interesting as we started to kind of peel the layers of the onion back. And what was so phenomenal was this was in 2011. I didn't even realize at that time that there was a $4 trillion industry around socially responsible investing, which I think speaks to the fact that even though I've been on Wall Street for 40 years, I don't think when people think of investing or they think about companies, they don't think about anything other than tell me about its earnings, tell me about its profitability, tell me about how much money it can make me. So again, as we went through the whole thing, my first inclination was, oh, this is going to be great. We'll find an index on corporate justice, and this will be a great way for me to invest my IRA, my 401k, which somehow I think I probably have done the worst job of investing that personally of anybody on earth. I thought this will be great. I can put it in companies that are also very just. And I would kind of liken this journey to the internet today. And I'm not trying to say I'm Al Gore and invented it, but you know, the people who started ARPANET had no idea what it would turn into. And so when we first started down the road of just capital and creating a just index, I had no idea that it would transcend or will ultimately transcend something way beyond just the investment applications. I think it actually has a chance to be so transformative at scale and impact a variety of other constituents. When I think of kind of the world that we live in, when it comes to particularly how we interact with companies, I think of you've got really 5 stakeholders. You've got shareholders and management is one, and we've kind of got this 50-year legacy of Milton Friedman, who said the only purpose of a company is to make profits for its shareholders. So they're one, but there are other stakeholders besides them. You have the consuming public who utilizes their products. We have their employees who obviously depend upon them for their incomes and their lives, build entire professions around them. We also have communities, those local communities where those companies operate. And then finally, you have the planet. So when I kind of think of the business ecosystem, those are the 5 stakeholders that kind of come around a company.
So those are the stakeholders, and nobody can be against justness, you know, right? How do you define justness?
So, when we started out, one of the reasons why I didn't know that there was a socially responsible investing industry, $4 trillion, was because there wasn't a convener. There wasn't some entity that was kind of, I think, the centerpiece of it. And one of the reasons why is because every index, many of them were niche indices. They were just around environmental sustainability. Some of them were around social inequality. Some of them were around economic inequality. The other problem is, whoever creates those indices can always be accused of having some bias.
Sure.
It could be a conservative, it could be a liberal bias, it could be an environmental bias. So that's always made people, I think, legitimately and sometimes justifiably look askance at these socially responsible indices. So I think what is going to make the Just Index different is that what we have done is we went to the American public and we took a clean sheet of paper and we started with focus groups all over the country. And we said, if you had to define this blue sky concept of corporate justice, how would you actually go about doing that? And we took 180 different factors that those focus groups told us, and then we went and we did a perfectly demographically representative sample of 50,000 Americans and found out from them exactly what they thought were the most important drivers of corporate justice.
So you come up with these criteria.
Correct.
That's I would say grassroots up rather than top down.
Correct.
How do you apply those to companies, and when are you going to be able to do that? When are we going to have your list?
So again, the one thing that I found this exercise, it's the most difficult, challenging. It's a quant exercise that requires really good modelers, really good mathematicians, data scientists. And I would implore anyone listening, we are a not-for-profit with an $8.5 million budget with 21 people on staff and about a 25-person board, and we need help. Because our job is to simply give the American public the little person who doesn't have a voice, to give them a voice. Our job is not to do anything but to be an honest broker for what they think constitutes corporate justice. And so, again, what we've done is we took their ideas and we basically took those 180 factors, we consolidated them into 36 components, and up from that we aggregated them into 10 drivers. And then those 10 drivers, I'll just tell you the two most important, unsurprisingly, are what do you pay an employer? Do you pay them a living wage? So pay and benefits is number one. And number two is how do you, which is equally as important. And together these two this year, because we actually did a beta test last year, these two constitute 50% of the index.
So do you pay them a living wage? And what's the second one?
How do you treat
them overall? And then how do you determine which companies do well on that? How do you get the data?
Interestingly, we're having to collect something in the neighborhood of 75,000 line items. So what we're going to do, just so everyone understands, we're taking the Russell 1000, the 1,000 largest companies in America, and we're going to ultimately rank them from 1 to 1,000. This year, the week after Thanksgiving, we're going to release our first index, which is America's Most Just Index. So it's the most just companies in America, but we're ranking on our first try, our first effort is going to be just by sector. So,
and you'll rank the best, you won't necessarily rank the worst.
So what we're going to do is so there's 32 sectors, and we're not in the shame game. This is a competition for goodness. So we'll probably release the top 75%, and we just won't rank the bottom 25% within each sector. Within each sector, there'll be a number one, and then those 32 companies will be able to use our seal.
Okay, I think we have the seal we can put up here, actually, to show you what it's going to look like. Keep going and
so
get up here.
They'll be able to use our seal, which is the Just Seal. They'll be able to apply them to their products. And let me just say, I know preliminarily that America's Most Just Index, these 32 companies, if you go back and look at their performance over the past 10 years and since the turn of the century, they've outperformed significantly the basic stock market.
No, that's interesting. That takes us to the question of what is one to do with all this? What's an investor to do with all this information once you get it out and it's reliable, you know what it is? Because, I mean, obviously a lot of pension plans, for example, insurance companies, they've got a fiduciary responsibility to try to return as much money as they can, right? To pay their obligations.
Right.
How does that balance with this? I mean, would the people who invest with you expect you to take that into account in your investments?
Well, I would say this. I do really believe, and again, I'll go back to the internet example. I see this as being so transformative. I see it being transformative because I now see that the concepts of justness also equate with corporate performance. And corporate performance equates with earnings, which equates with share prices, which equates with outperformance. So I think that when we release this, that it is going to ultimately impact investors, which are going to obviously impact corporate boardrooms. But if I can just digress, equally as important as what it does to investors is what it's going to do to consumers. Imagine that you have a choice of buying 2 boxes of cornflakes, and one has, and again, I'm thinking 5 or 10 years down the road when I hope this is ubiquitous. One has the Just seal and one doesn't. Which one are you going to buy? So I think it'll flow back through the product line. I've got 4 kids between 19 and 26, all at various stages of the workforce. They're really concerned about the type of company that they work for, more so than I've ever seen. So yes, I think they'll look at these rankings, and that will greatly impact where people want to work, where they continue working. So I think that will also drive boardroom behavior. Again, if I go back to the 5 constituents, where we've lived, certainly through certainly for the last 30 years until the last
That was
year,
Bloomberg's David Weston with
lived
Tudor Investment founder Paul Tudor Jones at the Bloomberg Year Ahead Summit.
We've got breaking news here. Chipotle reporting earnings. Third quarter comparable sales, which is the number that everyone looks at for these restaurant chains, down 22%. Analysts were looking for a drop of 19%, so this is worse than expected. And in terms of the comparable sales outlook, that Chipotle sees improving because it now is looking for low single-digit declines in fourth quarter comparable sales. Revenue was $1.04 billion, a little bit shy of what analysts were looking for, $1.09 billion. And I guess the big news here for Chipotle is the outlook. For 2017, they are looking for $10 earnings per share versus the consensus estimate of $9.9 billion. Chipotle also approving up to $100 million in a program for stock buybacks. All
right, we're also seeing Panera reporting after the bell, the bakery operator, reaffirming its forecast. The stock is getting a lift of some 6%, as you can see after hours, beating on the EPS, beating on the revenue, $684 million in sales, not $680, but mostly it's that reaffirmation of their comparable, easy for me to say, sales in fourth quarter, and that they're raising slightly their targets on the EPS. This is a stock that has actually been down a little bit, so a bit of a pickup for Panera.
All right, what's not getting a pickup right now is Pandora, which we'll revisit, down about almost 5% in the aftermarket here. Not so, even more actually. Now we're down almost 8%. Part of this was their adjusted, looking at their expected yearly revenue, about 1.4 to 1.35 to 1.37 billion, lower than what they had expected. Also, listeners were about a little bit up, but users overall were pretty flat. So coming up, we're going to talk about Samsung phones, which, although they've been in the news for their tendency to blow up lately, they also have a tendency to score higher than Apple in one key metric. We'll tell you what that is up next. This is Bloomberg.
I'm Scarlet. What you missed, Apple will be reporting earnings any moment now. We're going to take you through an Apple-themed deep dive. You can find all these charts using the function at the bottom of the screen. So investors will be looking for any kind of commentary on what the Galaxy Note 7 problems over at Samsung are having on Apple. And this chart really highlights the differences between Apple and Samsung when it comes to analyst ratings. What a difference 5 years makes, because back in October of 2011, right around here, JP Morgan upgraded Samsung. That means all 40 ratings compiled by Bloomberg at the time were a buy. And Bloomberg gives buy ratings a score of 5, hold ratings a score of 3, and sell a score of 1. You could see that Samsung was perfect back in October of 2011. Since then, however, we've seen it drop off, and just for a brief moment there, Apple rated higher than Samsung. These are just analyst ratings, of course. If you look at market cap, Apple has Samsung's market cap beat by a long shot.
Yeah.
Amanda?
Fascinating. Well, here's one of the numbers that we're going to be watching when we get these numbers after the bell. Shipments of iPhones and revenue declines. As you can see in the third quarter, 23% drop in revenue, 15% drop in iPhone shipments. Those are numbers we will be watching very closely to see whether we can find some improvement or at least a decline in the decline. Oliver?
All right, and then we've also got a little bit of an estimate here that's kind of breaking off from the norm. We're basically looking at Apple's earnings expectation about $1.65 right now, but the price has diverged from that a bit. And then also, of course, we've got all the big products that we're going to be watching. You got the watch, you got the iPhone. Of course, we're going to be looking at what happens with the iPhone 7 sales, but ultimately, we got to figure out what's going to happen with the other products as well. So we're going to get back to that with Apple's earnings next. That's going to be here right on Bloomberg. This is Bloomberg.
I'm Scarlet Fu. What'd you miss? Well, Apple just reported results for the fiscal fourth quarter. Earnings per share of $1.67. The consensus estimate among analysts was for $1.66. So that is a penny better than the consensus estimate. Revenue missed analyst estimates. Fourth quarter revenue was $46.9 billion. That looks to be right in line with the average analyst estimate. So I'm looking at the headline here. Perhaps we're going out 2 decimal points or so where when we talk about the miss. Now, in terms of gross margins, let's look at the first quarter gross margin. 38 to 38.5% is what the company is forecasting. The consensus estimate is for 38.9%. Of course, Apple tends to lowball its guidance. And when you look at the shares of Apple, the first reaction here is a gain, up almost 2.5%.
Yeah, one reason for that will be what they're forecasting on their fiscal first quarter. That was always going to be closely watched. They're saying $76 to $78 billion, and the expectation was for $75 billion. Inline iPhone sales, 45 million handset units sold in the quarter, so that will satisfy. But it is really that forward guidance, I'm guessing, that's driving some of the excitement here. Some of the numbers that we're still watching for is how they're faring in China, hugely important there. And you mentioned the gross margin. We'll see how that settles.
And exactly, gross margin for the fourth quarter, 38%. Analysts were looking for 37.9%, so almost there, or actually just a little bit better than anticipated. Amanda, you mentioned Greater China sales. We have that number here, $8.79 billion. That is shy of what analysts had, that is lower than what it was in the third quarter. So sequentially, a bit of a decline from $8.85 billion.
And we got some clarity on the iPhones as well, right? Because we had a little bit of a lack of clarity this time in terms of the way they sort of announced how their sales were going. iPhones altogether, they sold about 45.51 million in the fourth quarter, estimated 45, so slight beat there. And even though we've all moved way on from the iPad, those numbers also a little bit better than expected. So in terms of the products wise, we're getting some clarity on that as well.
And the average selling price of the iPhone as well for the fourth quarter was $618.72. Analysts were looking for $625. There was that concern that the ASP would be coming down because of the addition of the mid-range Apple SE phone. Do you have one of those?
Important to note that half of those sales are me losing my phone and having to buy it at market price.
That's right. And we should also note that along with that forecast, that high forecast for fiscal first quarter, they're saying higher than expected holiday sales on iPhone 7. So higher price point, driving higher with margin, higher margin sales, and it all adds up to, as you can see, something that investors so far are liking a lot.
All right, so for a deeper analysis on Apple, let's bring in Bloomberg Intelligence Senior Research Analyst John Butler. And John, of course, the number that everyone was focused on and that you were paying so much attention to was the iPhone unit number that Oliver just gave us, 45.5 million, slightly better than what analysts had been anticipating, although the average selling price was lower.
The ASP was a little bit lower. It's not, I'll start with this. It's not about this quarter. It's about the holiday quarter. iPhone 7 began shipping on September 23rd, so they really didn't have a lot of time between then and the end of the quarter. So it was really about what we're seeing here, maybe pre-orders and some of the initial stocking in the iPhone stores that sold through. But next quarter is what's really important for them. And it's going to be very telling because you have a lot of things that are benefiting sales right now. You have the Note 7 debacle, number one. And number two, you have a whole base of these iPhone 6 users now holding 2-year-old devices. Right. So there's really potential there for upgrade.
And in looking through the press release, this is on TLive Go. So if you have a Bloomberg and you hit TLIV Go, we're live blogging Apple's results. CEO Tim Cook has said in the press release that the company reported revenue growth of 24% in the services business to an all-time high. That's not a very big part of the business, though.
It's not a big part. It is an important part, obviously, because of the margins. I'm curious, John, what you think about the China number. It is lower than third quarter, 25% geographically speaking of their sales. Huge potential there. Is that a big disappointment?
You know, China is something to watch. We all know that it's been weak over there. They're struggling with slowing growth, not just Apple, but the overall economy. It's about 25% of iPhone sales in any given quarter, so it is a quarter to watch. Again, I look forward to that fiscal first quarter, which is the calendar fourth quarter. That's when this game really begins for them. And again, I think the big swing factor is Samsung, and that would include China, by the way. Samsung is a big vendor in China. They're now not a player with the Note 7. They pulled that from the market. That is up against the iPhone 7 Plus. And so they have a little more runway than they normally do. So we'll see how they execute.
John, let's talk about that swing factor because the Galaxy was obviously a big competitor until this entire thing, blew up. The question is, what are investors going to be looking at to determine whether or not Apple is seizing on that opportunity? Or does Apple even need to? Can they just go about business as usual? Or can they really bring some of those Android users over and show them just what their product is?
I think there'll be a bit of that. I mean, this is a real opportunity for them to attract over some of those users that have been on the fence. I think the iPhone 7 is a great device. They did a very good job with that. The price points are high, but they're high for the Note 7 as well. Samsung, again, is only out there competing now with the Galaxy S7, but not the Note 7, which goes up against the Plus, and you have everyone migrating to these larger screens. So, again, I really think the ball is in Apple's court right now.
All right, we want to keep you right there, John. Bloomberg Intelligence Senior Research Analyst John Butler. Stay with us.
And for all Bloomberg Intelligence reports, be sure to check out BI Go on the Bloomberg. In the meantime, Bloomberg's Emily Chang has just gotten off the phone with Apple's CFO, Luca Maestri, and she joins us now from San Francisco with more. So, Emily, give us the highlights, please.
Hey there, Scarlet. Just got off the phone with Apple CFO Luca Maestri, and I think the headline here is a beat for the forecast for the holiday quarter. You know, he believes this is driven by huge customer satisfaction around the iPhone 7 and the iPhone 7 Plus, specifically the new camera and the new colors. Every time they add new colors, people get excited, as well as interest in the second generation of the Apple Watch. What's interesting is he pointed out that they have been supply constrained for these new phones from the very beginning. Specifically, he said, in this cycle, we're seeing some level of supply constraint from the moment we launched the phone to today, which is significantly higher than we saw a year ago on the iPhone 7 Plus. If you look at order times, we're talking about several weeks before you can actually get an iPhone 7 Plus. This is a problem we want to address as soon as possible. Production will improve weekly, and they're hoping, of course, to be in some sort of supply and demand balance as soon as possible. The average selling price of a single iPhone has increased from last quarter. Of course, we know that they've introduced cheaper phones, the iPhone SE, and those have been quite popular, but the more popular a cheaper phone is, then overall revenue goes down. However, because of the introduction of these new phones, we're seeing the average selling price of an iPhone increase back up to $619, about $23 more than it was last quarter. Big question, of course, is Samsung. How is Apple going to benefit potentially from this massive recall of the Note 7 smartphones? He said it's difficult to tell at this point because they're in a situation, again, where they're supply constrained. But everything we produced, he says, we can sell right now. So it's difficult to identify the different factors that are driving this. And even before this situation developed, we had the highest amount of Android switchers we've ever had. So more and more people coming to the Android platform because they are looking for a better experience. And, of course, he touted Apple's ability to marry hardware and software. The other highlight, in addition to beating for the holiday quarter forecast, is, of course, what's happening in China. A 30% revenue decline year over year. We did ask him about this, and he said whenever you're looking at emerging markets, it's really important that you're looking long term. So he took us back to 2 years ago and compared 2015 to 2014, saying, you know, compared to 2014, we're actually up 52%, which means an annual growth rate of 23%. We had this extraordinary upgrade cycle in China, so there were a lot of people trying to get their hands on that larger iPhone, and upgrade rates went up significantly. They've come back down now to a normal level, so again, it is difficult to compare, but they're confident that performance will start improving. He did point out that in their top 40 markets, they're gaining market share in 33 of them, so that the improvement that they're seeing is very broad-based around the globe.
And Emily, in terms of services growth, that seems to have taken a leg up as well. We know that Pokemon Go was very popular at the start of the September quarter. How big a role did that seem to have in all of this?
Yes, Pokemon Go incredibly popular, and we know Apple gets a 30% cut of that, and this is in the services bucket. He said that Pokemon Go did give them a boost, but it didn't really move the needle when you're looking at the services business overall. What they're seeing in the services business is sort of broad-based growth across whether it's iTunes or Apple Music. But some would point out that while the services business is growing in relative terms, 24% year over year, it's not growing so much in absolute terms. So you're seeing them add about $1 billion every quarter onto their services revenue, but it's just not nearly the size of the iPhone business. You're looking at a $6 billion services business at this point, you know, when the iPhone is bringing 10 times that. So, of course, services is certainly an opportunity for growth at Apple. But again, the iPhone is continuing to drive the revenue of this company.
All right. It certainly is the iPhone company. Emily Chang, great stuff. Thank you so much. Emily Chang, anchor of Bloomberg Technology. Let's just get a recap here of Apple's results. When we look at the fiscal fourth quarter earnings per share, a penny better than what was anticipated, $167. Revenue, however, missing analyst estimates. The first quarter revenue outlook is at least $76 billion. And up to $78 billion. The consensus estimate there was $75.4 billion. And because Emily mentioned that it's all driven by the iPhone, we should mention as well the iPhone unit sales in the fourth quarter, 45.5 million, slightly better than what was expected, although the average selling price was a drop from was lower than what analysts had been looking for.
Right, and then I just want to jump in real quick to look at what's happening after hours. As the stock did turn around a little bit since trading continued here, we're now down about over 1%, getting closer to about 116 on the stock. So whatever it is that people are focusing on here has kind of shifted away from the projections looking forward and maybe getting a little bit more assessment on what's happening right now in terms of those sales, in terms of the first sale decline in more than a decade.
Annual sales decline.
Right, annual sales decline year over year. All right, so we'll be back with more on Apple after this as well. This is Bloomberg.
I'm Scarlet Fu. What'd you miss? We just got Apple's fiscal fourth quarter results, and we are still here with Bloomberg intelligence analyst John Butler. We want to bring in now Longbow Research senior analyst Sean Harrison, who joins us by phone. And Sean, when we look at what we know from Apple so far, reported $46.9 billion in revenue, matching analyst estimates. It sold 45.5 million iPhone units in the fiscal fourth quarter. The average selling price, though, was down, probably due to strong iPhone SE sales. The stock rose originally on those results, yet it has made a U-turn and is now lower. What within the results might have prompted investors to turn a little bit more bearish?
I think it's really focused in on the drop through the gross margin. It's lighter than where consensus was expecting, particularly that you're seeing an upside in revenue expectations tied to stronger iPhone sales, which many of us would have thought would have benefited from stronger iPhone Plus demand. And so the question on the call is going to be, why isn't gross margin higher? Is there greater production costs this quarter? Is there something else going on? Is there a mixed dynamic that maybe we were expecting that isn't occurring related to the iPhone.
And when you look into the fiscal first quarter projection, Sean, do you see mitigating factors there? The revenue looks higher than anybody had expected. Apple is sounding very bullish about that holiday quarter.
They do sound very bullish, and so you saw revenues at the midpoint, nicely ahead of consensus. It's that it's not dropping through to earnings, and so that's going to be the big question on the call. And that, China's still a little bit of a headwind. It was down 30% year over year. That'll be a focus as well. Does that turn around in the December quarter? But I think it all falls on to, why aren't we getting the earnings lift with this sales surprise?
John, I want to bring you back into the conversation because we were just talking about the supply-demand relationship that's happening right now with the iPhone sales. You think perhaps it's more an issue of the supply situation. Tell us why.
Well, I think it's a mix of issues, but one thing that we may be seeing this quarter is if you rewind back to the launch of the 6S, which is the model prior to the 7, they ultimately had to do an inventory correction. They had to burn off some inventory in the channel. And so I think that reflected a misjudgment on their part of the ultimate demand. And so they probably approached the 7 with a more conservative approach in terms of inventory, particularly in the channel initially. As we move into next year, I think inventory will be less of a problem. They'll have a better gauge of demand. The bigger issue that was just mentioned is China. Obviously, you're not just dealing with economic weakness in the region, but you're dealing with some very good competitors there. So I think Apple is not the only one rushing into that void left by the Note 7. You're going to have Huawei, Oppo, and Vivo, 3 very good vendors, particularly Huawei, which plays at the high end with Apple.
Yeah. Apple says that 62% of its revenue during the fiscal fourth quarter were from international sales. But as you mentioned, Greater China sales down 30% year over year, Amanda.
Yeah, pretty significant. It is one place that I think was going to be closely watched, as John has said. One question I guess I would put back to you, Sean, is when you look at the margin pressure, and it's continuing right into fiscal first quarter, there are disappointing projections on margins there. Obviously, questions will be asked on the call. But what's your bet about what's happening on that front? Is it costs of getting into the Chinese market? Is it marketing costs? Why are the margins disappointing?
I think John made a good point in that they ramped up a little bit more slowly. Maybe they're expediting product into the market right now. There's additional cost of getting more phones in the market. Verizon was pretty explicit on its call that it doesn't expect the supply-demand dynamic to normalize until later in the fourth quarter with the iPhone. So there's likely some cost there. In addition, they're relaunching the Mac line here during the fourth quarter. There may be some ramp costs that we didn't anticipate properly related to that because it is a later relaunch of the product this year.
Sean, just addressing your call on the stock right now, you, as early as this week, reiterated your $140 price target on Apple, saying it's a buy. Obviously, that's a pretty good ways from here. How does today's numbers fit into that thesis?
We were expecting upside to iPhone volumes relative to consensus for the quarter, and so that had played out. We will need to get questions answered related to gross margin. There's a longer-term dynamic here at work as well. There's a growing iPhone subscriber base that if we get into a super cycle next year with the potentially new form factor, that could drive a lot of demand. Service sales, those were all-time high, up 24% year over year. Great high-margin cash flow business as well. And so let's see if the gross margin dynamic is more of kind of a temporary issue versus a permanent downturn here with the call. I think there's still other good factors at work in terms of a lot of iPhone demand out there, services growing rapidly. That continues to help out the stock long term.
And of course, when you look at other products, we're looking at the Apple Watch here. Other products revenue down 22% year over year. At what point does Apple Watch become a needle mover for the company, or have we given up hope for that?
Go ahead, Sean. Sorry.
I'm sorry. I think part of the decline in the watch year over year was new product launching late in the quarter. That hurt it as well. The Apple Watch is a good product. It's not a needle mover just relative to the number of shipments. If you're shipping a few million a quarter at a lower price point relative to 40 or 50 million iPhones, 70 million maybe this quarter, it's just not going to move the needle. I think the two biggest needle movers right now are services and the iPhone.
So, John, let's talk about service. So important, that high-margin business, clearly where Apple wants to drive growth. Are you happy with what you're seeing on that front?
They're doing a good job. It's going to take time. I think they look down the road at the runway for hardware, and they're running out of categories, right? They have computers. They have the iPod. They have the phone. And so what's next? And the what's next is services, and it was even speculated recently, content. But I am watching services. It's very high margin over time, and I think it really represents their future, given the huge installed base. They can really leverage that.
All right, John Butler, thank you so much. John Butler, telecoms analyst here at Bloomberg Intelligence. And, of course, our thanks as well to Sean Harrison, senior analyst at Longbow Research, for their instant analysis on Apple. This is Bloomberg.
All right, we are still on Apple, digging further into their earnings. Let's bring in Ramon Lamas, research manager of wearables and mobile phones for IDC. He joins us on the phone. Ramon, thanks for joining us here right after the earnings report. Let's talk about the watch here, because we've been focusing on the phones. But, of course, the watch has kind of been one of these potential growth areas as they're sort of pioneering kind of the wearable devices here. What did you see in the numbers? Does it tell us anything about how positive investors can be on that part of their business?
Well, when you look at the numbers, because the watch is buried in their other products category, there's no breakout for specific volumes. But if you just take a look at the revenue and how much other products revenue really contributes to the overall picture, watch is really not making that much of a meaningful dent nor a meaningful contribution to the overall picture. And if you listen to what Tim Cook said in the past, he keeps on repeating, watches meeting our expectations. If that be true, it says to me that the expectations for the watch volume-wise are rather low. Now, we can give the watch a kind of a pass because it's still on its first generation of devices, and only recently did the second generation devices come out. But clearly, they were not enough to, number one, stem the decline, and number two, it doesn't stem the decline for iPhones in general.
I want to ask you about this margin pressure. It does seem to be focused on the average selling price here, which was a disappointment. That may be what's driving the disappointed reaction after hours for Apple. We'll see what they make of it on the call, but definitely softer on the average selling price. Is that a product mix and inventory problem that will correct itself in the next quarter, or is that something that Apple's going to have to contend with?
I think, end of third quarter, start of fourth quarter, that's when Apple reaches for the reset button and presses down hard on it. Because in the months leading up to the new device launches, you're looking at significant cuts and decreases on older legacy type devices. So of course, that's going to have a downward pressure on ASPs. But if you take a look at some of the newer devices, maintaining those price premiums within iPhone and some of the other categories, and we're looking at some refreshed Macs and potentially a tablet, expect some rebound. Here's the thing for me when it comes down to watches, though. From a year ago, we saw much higher premiums, looking at those 350, 450, 550 kind of price points, and now we're dipping down to where your base level watch is going to come in at about $269 and $299. I think that could drag down revenue for watches as a whole. I think it's going to be an overall detriment to Apple's total portfolio.
All right, great take, Ramon. Thank you so much for being here right after the earnings. That's Ramon Lamas of IDC.
Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg.
What'd you miss? Apple reported fiscal fourth quarter earnings. It's an iPhone company, and iPhone sales were 45.5 million units in the quarter. The average selling price, $619, lower than what analysts had anticipated.
We're seeing a reaction after the bell, likely because those lower prices drove margins down.
I'm curious to know what's going to happen next quarter when people start buying the Apple Watch for a gift, because it's a gift, right? You don't buy a phone.
All right, well, looking ahead to tomorrow, we've got earnings before the bell, including Coca-Cola, Boeing, and Comcast.
And at 10:30, we'll get oil inventories. Watch for an effect on the price if those rise.
And I'm going to be watching Tesla after the bell to see what Elon Musk has to say.
That does it for What'd You Miss. Thanks so much for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.
I'm John Heilman.
And I'm Mark Halpern. With all due respect to Colin Powell and a surprising endorsement of Hillary Clinton, in the news business, we call that dog bites man.
Oof.
Show tonight, a poll stroll, an email squeal, and Bill Bradley's super PAC smack. But first, just in time for Halloween, it's an Obamacare scare. Republicans are on offense today after the Obama administration announced that health insurance premiums under the Affordable Care Act will go up by an average of 25% next year. Many insurers are also dropping out of state marketplaces. Donald Trump has been talking about this development pretty much all day, including at length this afternoon at a rally in Sanford, Florida.
My first day in office, I'm going to ask Congress to put a bill on my desk getting rid of this disastrous law. They said 25%. Forget 20. You'll take 25%. It's going to be 60, 70, 80, 90%. In the great state of Arizona, it's over 100%. Even Bill Clinton admitted Obamacare is the craziest thing in the world, where people wind up with their premiums doubled and their coverage cut in half. And then he was forced to take it back the following day because that night he suffered greatly. Repealing Obamacare and stopping Hillary's health care takeover is one of the single most important reasons that we must win on November 8th.
Trump also warned that people will see fewer insurance options under Obamacare next year, and he vowed to give people more choices if he becomes president. Democrats are pushing back. They're saying the subsidies for most people who can't afford insurance on their own are going to be offset with subsidies against the rising rates next year. But this Obamacare news has been a juicy fillet of red meat for conservatives across the fruited plain who have warned for years about rate hikes and less consumer choice. I give you El Rushbo.
This story on Obamacare premiums going up 25%, we need to stop for a second. Because this is outrageous, and it ought to have everybody in this country up in arms. By all rights, everybody in this country ought to be flipping mad and feeling betrayed and lied to by the Democrat Party and by Obama, and by extension, Hillary Clinton ought to be in deep trouble because she's out there advocating this thing.
So Bill Clinton, who you heard Trump say got in trouble big league for criticizing Obamacare earlier this month, again proposed fixing problems with the legislation today while he was campaigning in North Carolina.
So what would a country that was interested in being stronger together to do? You'd keep what's good about the law and attack the problems. She's the only person you can vote for that wants to do that. He just said, I'm going to repeal this law, trust me on the rest. Look, what are the problems with the law? We can all tick them off, right? The co-pays, deductibles, and premiums are too high, and the drug prices are too high.
All right, so, John, the Republicans are jumping all over this. They will continue all the way through Election Day. Is this a big game changer, or are Republicans overstating what they have here?
Where do I start on this? First of all, big league, not big league. Second of all, that Trump camo hat, the new hat, I haven't seen that before, but that's sort of...
He's worn it before. Pay closer attention.
It's quite something. I got to pay closer attention. The third thing is, Rush Limbaugh, like lays out, is the perfect example of why this is not going to be that big a deal. Because, first of all, he says everyone in the country should be outraged. Most people in the country have insurance through their employers, have Medicare, have Medicaid, get their insurance some other way. This is not a small group of people, but it's not everyone in the country. The second thing is, over time now we have seen that there has been a stabilization in terms of how the public views this law, which is to say it's a little bit more unpopular. About mid-40s people like it, a little bit higher dislike it. This is not going to suddenly revolutionize that and start to reach people who, there might be some, small number, who are not going to like their premiums going up. But the idea that this is going to revolutionize the race, most Republicans have hated the law for a long time and now will hate the law even more, just like Rush does. But it's not going to change the dynamics of this presidential campaign meaningfully.
If somehow Republicans, not just for president, but other candidates, could be in a disciplined way to talk about this the rest of the way, I think in close races it could make a difference.
Well, I thought we were talking about the presidential race here primarily.
No, I'm talking about the whole campaign.
Yeah.
The reality is almost every Republican on the ballot doesn't support the Affordable Care Act. Almost almost every Democrat on the ballot does.
Yep.
And you're going to see places that are close where Democrats now are going to be put somewhat on the defensive, particularly in states where the announced statistics show.
Yep.
So, for instance, take Arizona.
Yeah.
You know, and in the presidential race, too. You're going to see energized Republicans in defense of Democrats. I will say it's a great test for Trump. Today, he did an imperfect job. He talked about it a lot, but imperfectly. It exposes the fact that he doesn't really understand the law very well.
Here's the way in which it'll help. It's good for Republicans in this sense. A lot of outside groups like the Koch brothers and others have focused on this issue, and it'll put a lot of money behind the media. This will be helpful, I agree with you. Possibly in some legislative races, some Senate races, Republicans will get a real talking point out of this, and it could actually help them in a meaningful way. But I will say for all of them, and most specifically for Trump, it would make it a lot easier to take advantage of this if you had an alternative to offer. What you will do. Donald Trump's saying there'll be more choice under my plan. Well, there is no Trump plan on health care.
It could.
Doesn't exist.
It could help Trump from being blown out if he's currently on a path to being blown out.
All right, on to our daily Wikileaks update. New alleged Clinton campaign emails were posted today on that show. That show, among other things, some downright vicious infighting between Chelsea Clinton and longtime Clinton aide Doug Band. But two fresh revelations are getting the most attention because they offer a window into how Clinton's team handled her unorthodox email practices and private server when they were revealed in March of 2015. The first is an email that seems to depict Clinton's top aide, Cheryl Mills, suggesting that President Obama knew about Clinton's private email account, even though he said publicly at the time that he learned about it through news reports. Referring to emails between the president and Clinton when she used the private account, Mills wrote, quote, "We need to clean this up." The second email turning heads today is a colloquy between then incoming Clinton campaign chairman John Podesta and Center for American Progress President Neera Tanden, who complained that Clinton's team failed to get out ahead of the email server story. In that message, Tanden says the campaign did not disclose the private account sooner because, quote, they wanted to get away with it. So, Mark, I have the same question for you now as you asked me. Conservative media outlets and the Republican Party are jumping all over these disclosures that they have over almost every disclosure in the WikiLeaks story. Are these that relate to the email server, et cetera, are these as big a game changer as Republicans are portraying them to be and hope they will be?
These are pretty bad. I would say, you know, we've had days and days of this. These are as bad as there are in terms of sort of creating an atmosphere of a notion of an attempt to cover up Clinton behavior. It's so problematic for them that none of these are from Hillary Clinton, though. This is still staffers talking about things. No huge smoking gun, but it does give Republicans a sense. I don't think the dam is going to burst. I don't think this is going to be a game changer at the presidential level. But again, it does create a momentum for the Republicans and energize the Republican base as much as any of the ones that have been disclosed so far, I think.
Look, I think Cheryl Mills saying we need to clean this up. I mean, obviously, they were in damage control mode when this stuff came to light. That doesn't really shock me. The Obama thing is, there are a lot of questions about what President Obama, about the possibility that he had an anonymous account and was connected to Hillary Clinton's private account and what he knew. But that story was put to bed a long time ago. The White House came out and said, you know what the president was referring to is he didn't know that she had a home server and that she used it exclusively. He wasn't claiming that he didn't know she had a private email address.
The most damaging thing in here for President Clinton, not in terms of her chances of getting elected, is it shows that within her inner circle, finger pointing and suspicion that there are enablers around her and that powerful people in her circle can't stop the enablers from enabling.
I don't disagree with that.
All right, a lot of talk about polls today, just like every day, and much of the discussion centers on two national surveys that show somewhat different snapshots of where the presidential race stands. The new NBC News SurveyMonkey poll, national poll, shows Clinton leading by 6 points, 50 to 44, amongst likely voters. But the ABC News tracking poll that's out today has Clinton beating Trump handily by 12 points, a mega landslide, 53 to 41%. There are, of course, a number of ways to explain discrepancies like this. How do the pollsters define likely voters, how they weight their samples, and whether the poll involves surveying people online. The more interesting question, though, than the discrepancies in national polls is the state polls in the battleground states. Clinton lead clearly has grown nationally, but Trump's numbers in some of the key battleground states have not moved very much at all. Take, for instance, North Carolina, where a poll out yesterday from Monmouth University shows Clinton with just a 1-point lead amongst likely voters, 47 to 46. In Florida, a poll out Sunday by CBS News showed Clinton with a 3-point lead amongst likely voters, 46 to 43, also within the margin of error. And in Ohio, the most recent poll there that we look at from Suffolk University has the race tied at 45%. All three of those states are, of course, must-wins for Trump, but he has not faded there the way he has nationally. So, John, what are the possible explanations for the discrepancy between Clinton getting to a big national lead or a huge national lead, but Trump hanging in there in some of these states?
Well, I find it a little perplexing. I will say that these are battleground states for a reason. They're not. These are states where, where the race is being fought in a very aggressive way. These people are hearing more from Donald Trump on the ground than necessarily a lot of national polls. People being polled are seeing only the news coverage, and the news coverage is almost entirely negative towards Trump. Some of these people in North Carolina, Ohio, and Florida are seeing Donald Trump, and he's making his case there more actively and getting a chance to get positive news stories out. But again, still is the case. He's still in almost any of these polls in the state level, even the ones where he's doing better than he is nationally, he's still not getting much above 41, 42%, which is not enough to win those states any more than it is to win nationally.
Yeah, the people who think Trump has a chance would say, first of all, there's a secret Trump vote, and second, that she's the incumbent, so he'll get the bulk of the undecideds. I think the main reason why he's still holding on in these states is because he is spending time there, as you said, and because they've heard so much about Trump that the recent headlines that have moved Hillary Clinton's national numbers, they're not phasing these people as much because they're more living with the race. They're living with both candidates and their warts.
I'll tell you what it's true. What I do know, though, is I know that none of this is about phony polls or about rigged polls or even about secret votes. For all you people who are saying all this crap, just remember what happened in 2012 when the Republican Party sang exactly the same tune and turned out to be wrong, wrong, wrong. If you keep singing that tune, you'll prove it to be wrong again on this election day.
There is a lot of private polling data, some of which I was looking at last night, that shows Trump is hanging on there in these states. Not enough to get him to win, not enough for him to be a threat right now, but surprisingly strong in some of these states where he could possibly win, but as you said, his number currently is too low to win.
All right. Up next, President Obama's party-building pursuits, and we will have former Senator Bill Bradley on the show a little bit later to talk about his new super PAC. But first, these words from our sponsors. President Obama has been out pounding the campaign trail on behalf of Hillary Clinton, but he's also making an unprecedented push to help Democrats running for the House, the Senate, and in state legislative races. Yesterday at a fundraiser in La Jolla, California, Obama said of this election, quote, "We want to win big, and we don't want to just eke it out." The president is endorsing dozens of down-ballot candidates this month and has plans with former Attorney General Eric Holder to lead a post-election effort to shake up congressional redistricting across the country. Mark, until now,
President Obama has seemed wholly uninterested in the fate of his party over the course of the time that he's been president these past 8 years. But he suddenly seems focused not just on electing Clinton, but on helping Democrats more broadly this year and into the future. So, first of all, what do you make of what he's doing? And is this suddenly, like at the very end here, the emergence of Barack Obama party builder?
I would love a huge national, robust discussion about the way redistricting works, because I don't think it's good for the country. Democrats have been disadvantaged, but neither party should like it. Civic leaders shouldn't like it. I'd love for the president to do this. I am surprised at how hard he's working for Hillary Clinton. I will be quadruply surprised, though, if he engages in what is truly the most kind of technical, mundane, party-oriented thing when he leaves office. It'd be great if he does it. But I'll be surprised if he really devotes a lot of time to it.
But look, there's no doubt that he's actually putting his shoulder into the down ballot thing. There's no question about that. He's endorsing state legislative races, not just at the House and Senate level. But he's never done it before.
But he's just saying I'm for the Democrats.
He's never done it before. But he's out there on the trail doing. I'm not saying he's actually campaigning in state legislative races. I'm just saying unprecedented by him to do this many endorsements, and he's out doing a lot of campaigning.
He endorses every Democrat in the country.
He's out there doing a lot. He's out there doing a lot of campaigning.
But this thing about endorsing a lot of candidates.
So the second thing is, again, just a little bit of a difference in how he's handled these past elections in the course of his time in office. This thing about redistricting, we agree about the need to fix that problem, and clearly Republicans gamed that system back in 2010 to their advantage. I actually am hopeful that President Obama and Eric Holder, who I think is key here, are not going to be trying to do this to benefit Democrats, although I'm sure they will. But really, we do need to have a big discussion about this because it's a huge part of the problem with the polarization that has messed up our politics.
It's got to be done at the state level. And so Eric Holder and the president would have to get involved in every individual state and the politics of it and the system and the courts. It's a local thing. It's a state thing.
I agree. But here's the thing. I think President Obama is not going to be in the weeds on this, but to have his name on something that Eric Holder is involved in an active way, not necessarily in the weeds, but just in 2010, again, I'm not even trashing Republicans when I say this. The reason they were so successful at gaming the system was they did it under the radar. To raise it up and have this discussion.
This is a political thing. Eric Holder's not the best politician.
To raise it up and have it in a big way, I think is important. We should have that discussion in a big public way. Coming up, a man who despises money in politics just launched his own super PAC. What the what? Former New Jersey Senator and NBA Hall of Famer Bill Bradley joins us next when we come back.
Half-century ago, Lyndon B. Johnson shocked the nation by releasing a TV ad that is still considered one of the most powerful political attacks in American history. The spot was called Daisy. It was run in 1964 against Republican Barry Goldwater, and it contained footage of a little girl picking flower petals just before a nuclear explosion. Well, now the good people of the Buckeye State are getting their own Trump-focused Daisy-style ad. The spot is called Careful. Take a look.
One nuclear bomb can kill 1 million people. That's more than all the men, women, and children living in Columbus, Ohio.
They're hearing a guy running for president of the United States talking of maybe using nuclear weapons. Nobody wants to hear that about an American president.
Why are we making them? Why do we make them? Why do we make them? Why do we make them?
The shadowy, well-funded super PAC that's running that ad, 52nd Street Fund, plans to put down at least $725,000 to air the spot in Ohio. The news here includes the identity of the man behind this effort. Former New Jersey Senator, one-time Democratic presidential candidate, Bill Bradley, is a well-known hater of super PACs. Senator Bradley joins us now to explain what made you start a super PAC to go after a presidential candidate with a negative ad.
Well, you know, Mark, I think the nuclear issue transcends all issues. Because if a president miscalculates, misreads the intent of the enemy, if a president doesn't have the leadership skills to diffuse a crisis before it gets to the nuclear level, then it doesn't matter what his position is on other issues, whether it's campaign finance reform or abortion or trade or immigration, because we'll all be toast. And I happen to think that that's an important thing for people to ask. Who do I trust with my life? And I think that's for Republicans to ask as well as Democrats, because we're dealing here with a very, very serious issue. And I think about Donald Trump, and I say, you know, he does not have the ability or the experience to be able to diffuse a crisis diplomatically.
So why not just go to Ohio and maybe give some speeches about this? Why engage in the kind of big money politics with a super PAC that you've derided?
Because I think that this is the best way to reach people, the most powerful way. You've heard me speak, right? I'm not going to sweep the crowds, that's for sure. But this is something you might ask, well, how did this come about? Well, you know, for almost a year, I watched the outrageous innuendos of Trump, you know, the slurring of African Americans, Latinos, and Muslim Americans, the denigrating of women, the attacking of the Gold Star family and by analogy the military, threatening to put his opponent in prison, attacking the American democracy with not saying whether he's going to abide by the result, saying dangerous things all the time. And I said, you know, I'm appalled. What can a citizen do? And so I had a conversation with my friend George Lucas, who came up with an idea for a commercial that would, essentially educate people about what nuclear war means. I then took it to another friend and agency in Boston who produced it. I then had it tested by the firm of my former communications director. I then started a super PAC, because that's the only way you get on. And I raised money from contributors who were Republican, Democrat, and independent. And we've bought time in Ohio for people to contemplate what might happen if Donald Trump was in a position with his finger on the nuclear button.
Creative director George Lucas, that's pretty good.
That's not bad. I want to get to the question about testing this ad, right? Because, you know, there have been a variety of things that Trump has said on foreign policy that have struck many people as dangerous. A lot of Republican foreign policy experts have condemned him. The nuclear issue seems to me to be obviously a big one, right? But it's amazing to me that that people don't discuss it more, that it's not gotten more traction out there, that he's kind of in favor of nuclear proliferation. Is this a thing that actually still resonates in today's world as a real threat?
Well, I think so. I mean, Bill Perry, a former Secretary of Defense, said we're closer to nuclear war today than during the Cold War, and that people are blissfully unaware of the danger. Right. So this is to make it clear to people that this is a danger.
Right, but this is the kind of question I have, though, is that for whatever reason, you know, people no longer, it seems to me, people are fixated on terrorism. They're fixated on ISIL. They're fixated on domestic terrorism. There's not a wide discussion of this. So is an ad in Ohio going to solve that?
Well, the question here is not just nuclear weaponry. Right. The question is the person who would be in charge of those nuclear weapons. Once the president says the missiles are gone, they're gone. They can't pull them back. And I think that, as I said, there's a question of, personality. Donald Trump is erratic. He is undisciplined. He lashes out. That's not the kind of person that I think we want to have with the finger on the nuclear button. I think you need somebody who is steady, not somebody who is impulsive. And, the real question here is also focus. I mean, look at Donald Trump in his 3 debates. How long did he focus in the debate? Maybe 30 minutes, maybe 40, maybe an hour. He didn't even focus an hour and a half. And if you're president of the United States in a nuclear age, you have to be able to focus 24/7. And I don't think he can do it, and that's why I think he's a danger to America.
We've got about a minute left in this segment. You talked about watching Trump over the course of the campaign, but you two have a history going back to tax reform period. Just talk a little bit about that and what impressions you think he took about you and you of him.
Well, I was on his early loser list, I think, because the Tax Reform Act of 1986, I think, was one of the factors that almost bankrupted him because we eliminated the tax shelters he was using to not pay taxes. So that was the origin. Then there was an issue related to his casinos in Atlantic City, which he thought the answer was sports gambling. Well, I don't like sports gambling, so I passed a law to prohibit sports gambling, which, also didn't please him too much. But the idea here is not what happened in the past with Donald Trump and me, but what the American people have to decide today and what kind of country we want to become. I travel around the country. I have for 50 years as a politician and a businessman and a basketball player. And I have an idea of what is best about America. Remember, when I ran for president back in the Paleolithic era, I talked about the goodness of the American people, and I really think that. I think the American people are decent. I think they're tolerant. I think they're generous. I think they are innovative. And that's the America that Trump has run against.
Okay, Senator Bradley, stay with us. We're going to come back, talk more about other things in the news with Senator Bradley right after this.
We are back with Bill Bradley, the former New Jersey Democratic senator and star New York Knickerbocker. Bill, thanks for staying on the court with us for some overtime. We're just talking about.
Now I understand.
Yeah, I get that. We're just talking about WikiLeaks and Russia. So, do you have any doubt in your mind? There's obviously Donald Trump disputes this. Most others think that Russia is in some way behind these email hacks for the Democratic National Committee, and then John Podesta. Do you have any doubt in your mind that Russia is somehow involved in all this?
Well, I know that 17 intelligence agencies in the United States government all said Russia was involved in it. So they know a lot more than I do about this. So you have to say that, yes, they are involved. And to me, it's really unbelievable that Donald Trump would encourage a foreign power to perform espionage and intervene in the political process of the United States. I think that I've never heard that happen. It's just another one of the Trump things that you can't believe.
Knowing what you know about Russia, which is a lot, do you think that the goal, if Putin is responsible for all this, do you think his goal is to try to elect Donald Trump or just sow mischief and mayhem in the American system?
I think the latter. I think he wants to demonstrate that they have certain moves that they can make. Well, we have plenty of moves we can make, too. The idea is just not be provoked by things and react unnecessarily. And I think in this, I have no idea who Putin wants. And the point is, if I were running for president of the United States, I would not really want Putin to endorse me. And so I think that it's unlikely that, I think it's just a part of the strategy to let us know that they're still there.
You at times have been critical of the U.S. government for being too confrontational with Russia. In this case, you sound pretty outraged about their interfering with the election. If you were president, would you retaliate against them for what they've done?
Well, I'd be very careful, because if it's a retaliation, it has to be a retaliation that you don't know about. And it has to be sufficient to send a little message that, we know what you did, and we...
What's proportionate for the interfering with our election?
Well, I mean, in Russia, and I don't have an answer to what's proportionate, but the idea is you want to find something. There's no reason to go at them with a big cyber attack, because we have a lot of vulnerabilities here in our grid, in our financial system, and so you want to respond, but you don't want to over-respond.
Most important question is, will we ever see the Knicks make the playoffs, and will they this year?
Yes.
They will?
Yes.
Why? What's good? What have they got going on?
My old roommate, Phil Jackson, is putting a good team together. And, now that you bring it up, I asked the question to myself, if Donald Trump was a basketball player, would he be able to play on a championship team? And the answer is no. He would not be able to play on a championship team because he'd want the ball all the time.
And he can't go left.
He can't go left.
How many games are you going to go to this year?
I went to more games last year than I had in 40 years.
Yeah.
So
you'll be in the Garden?
I'll be there, 7, 8 times, 10 times.
There's literally no one on earth.
Until they make the playoffs, then I'm there every day.
There's literally no one on earth who has more respect for Phil Jackson than me as a longtime Laker fan. But I will say that Derrick Rose, Joakim Noah, somewhere Sports Illustrated, we were looking at this today, and their preseason rankings said the Knicks had put together a fantastic team if we were still in 2010. These are some pretty old, broken down guys.
Well, there's a risk. There's a risk of injury. But there are also some good young players. One guy came over from Spain who was on Porzingis' team when he was in Spain. He's a great young player. So we'll see. I think Joakim Noah is really, I think, could be the heart of that team.
We're asking these questions just to make clear.
I like
the Knicks are opening tonight against the Cleveland Cavaliers in Cleveland tonight, so I'm not sure how well they'll fare in that matchup.
And it's a big night for Cleveland and Chicago. Who do you like in the series?
I guess I don't know who. I don't have a dog in the fight.
Got to be for the Cubs.
Either one of them, because neither one of them has ever won.
I know. The Cubs haven't won in forever.
Yeah.
Senator, thank you.
Thank
Always
you.
good to see you. Hope you come back soon.
All right, Bill Bradley. Check out his new ad and the Super PAC plans, all of them, on our website, BloombergPolitics.com. We broke that story. Fantastic, interesting, and spectacular. We will talk more about Obamacare when we come right back.
next two guests are medical experts. Well, maybe not, but they can talk about health care and the Affordable Care Act, which is where we're going to start with Democratic strategist Bob Shrum, who worked for, amongst others, Al Gore and John Kerry. He's out in Los Angeles, and here with us in New York, Anthony Scaramucci, founder of Skybridge Capital, a member of Donald Trump's Economic Policy Council, and the author of his new celebrated book, Hopping Over the Rabbit Hole, How Entrepreneurs Turn Failure into Success, available at finer bookshops now. Bob, what should Democrats be saying about the announcement regarding the Affordable Care Act, premium increases, and insurers leaving the market?
Well, first, I think this is a news story for the news media. It's not going to have much effect on the vote. Secondly, there's a huge amount of distortion in the reporting on this. Most of the people on the exchanges get subsidies, and if they get subsidies, they're not affected by this. Third, there is a problem which has to be fixed and which the next president's going to have to go to Congress to get fixed, and that is we don't have a third option, like a public option, that could see to it that people's premiums don't go up. But that's, I want to emphasize again, a minority of people in a minority of states. It's going to be a big news headline, I think in part because the press is looking for a way to say Donald Trump still has an issue. Donald Trump still has a way. He doesn't have a way forward. He's going to lose this election. I said it on this program a long time ago, and this isn't going to change that.
Anthony, is this an issue that Donald Trump will talk about every day between now and election?
He seems about as indifferent to Donald Trump as Senator Bradley is. Listen, it's not over. Anybody that plays competitive sports knows that the election is not over. And so, could he win or lose? I don't know. But if he wins, you're going to have to totally repeal and replace Obamacare because Obamacare does not work. And I can explain to you very simply why. I'll just use the example of my cousin who's running an auto glass shop on Long Island. He had to take his people off his health care plan. Why? The premiums have skyrocketed. Somebody said to me last night, well, he's below 50 employees. That's true. But the premiums have skyrocketed for everybody. So now they're off the plan. They have inferior health care for themselves. He's hobbled in terms of the amount of people that he can hire over 40 hours a week. And what you're doing is you're crippling the society with good intentions with this plan. And so it has to be repealed and replaced. There has to be a competitive process for the insurance companies. There has to be tort reform. And there has to be a focus on supply, guys, in the system so that you can create more doctors to meet up with the 25 to 30 million people that you're onboarding into the health care. Now, these guys are not going to tell you this, but they want to go to single payer. And that will wipe out innovation in the United States and crush the healthcare system. So we've got to explain it to the American people the way it really works and what is really happening instead of the talking sound bites and that sort of nonsense.
All right, Anthony, I want to stay with you just because it's great to have you here now that you've been liberated from your previous captors.
I get the opportunity to sell my book at finer and not so fine bookstores.
So here's my question. Here's my question. You retweeted your nominee the other day. When Donald Trump tweeted a major story that Democrats are making up phony polls in order to suppress the Trump. We're going to win. I think he meant the Trump vote when he tweeted that out. But you retweeted that. So here's my question. You're a man of the markets. You believe in numbers. Are you saying you think the polling is rigged?
I don't know if all of the polling is rigged, but I think there are elements of oversampling that gets done in these polls. You saw in the WikiLeaks stuff and Podesta's emails that there has been some oversampling, particularly particularly the ABC poll. Let me just finish. You're asking the questions.
But you can't just say that stuff and just like cruise by. Oversampling by a candidate who decides to oversample for various reasons is not saying that the polls that are run by major media organizations, including this one, are distorting their polls.
So I'm going to say to you, let me finish.
Yes.
There is a suggestion that there might be. Even if it isn't, let's say the polls are exactly accurate. In a year like this, would the two of you say that there couldn't be the possibility of an upset? Would the two of you say that it was 52-48 for Brexit and it turned around, it was 52-48 to leave the economic union? That did happen in this year. And so what happens in our society right now, because of the media bias, is there's a tremendous amount of Trump shaming that's going on, okay? I've lost friends over being a supporter of Donald Trump. There's a demonization and a caricature of the man, which isn't true.
Bob, here's my question for you. What's your experience been so far with in your many years of doing presidential campaigns? Have you seen a lot of poll rigging over the course of your time? You've been on the losing end of some presidential campaigns. Talk about that.
No, and for someone as smart as Anthony is to suggest that somehow or other the polls are rigged because of oversampling is idiotic and shows a misunderstanding of what happens. Campaigns always oversample, for example, groups like Hispanics so that you can get accurate numbers. Those numbers are not then included in the overall results of the polls. And this isn't done by the public polls at all. We have the public polls converging toward a 7, 8, 9-point Hillary Clinton lead, 12 points today in the Democracy Corps, 12 points in the Washington Post ABC poll. And when you look at individual states, Pennsylvania's gone. Most of the industrial Midwest is gone. Georgia and Arizona are competitive. Hillary Clinton may be ahead there. It's a terrible demographic cul-de-sac for Donald Trump. He's not going to get out of it very easily. And the Brexit analogy holds no water at all for two reasons. First of all, those polls were close and bounced all over the place. Clinton has had a consistent lead for a long time. Number two, the British electorate is 88% white. The American electorate is 70% or 69% white. And Donald Trump is in a terrible position with African Americans, with Hispanics, and with Asians. There's no way those polls are loaded against him. It's just another part of this rigging scenario, which is untrue and which does no credit to him. And I can't believe that someone as smart as the person I'm debating actually believes this.
Well, he called you both smart and idiotic.
Yeah, I didn't realize that. It was brilliant.
No, I said, how can somebody that smart say something that idiotic? It's a misunderstanding of what polls are.
What'll be interesting about the campaign, right? Because I am supporting a non-politician, and Bob's obviously got a lot of experience of being a politician, and so I'm not idiotic, and I didn't say that the polls were rigged. What I said was that there could be some distortion in these polls as a result of Trump shaming. Now, if Bob is going to suggest that the media has not shamed people from not saying that they are supporting Trump, they have. And so when they close
the poll numbers.
It would affect the poll numbers because when you're...
No, it wouldn't. Okay. Well, Bob, let me ask you about that. Let me ask you about that.
Tell me how it
point.
wouldn't, Bob.
Let me ask you about that exact point.
Yeah, I'll tell you how it wouldn't.
Yeah, tell me
There's
how it
no
wouldn't.
difference between the internet polls where people are, for example, anonymous than there is with the live polling
There actually has been some
So all of the
differences in
polling experts actually think that this Trump shaming is the skewing of 2016. It's not real.
Bob, let me ask you two numbers questions about polling. Number one, given where you think the race is, what do you think Trump's floor in the national four-way popular vote is?
37, 38, 40.
37, 38, 40, not 39. Second, I had a Republican say to me today, who is no fan of Trump's at all, that he thinks in North Carolina, maybe in Florida, there could be exactly what Anthony's talking about, which is, like with Harvey Gantt against Jesse Helms, that there's just people who won't tell pollsters they're for Trump. Probably not enough, certainly not enough to make up a 6-point lead. But do you think there's anything to that whatsoever, that pollsters are being told, I'm voting for Clinton or I'm undecided, when in fact they're for Trump?
Yeah, listen, this is the skewed polls of 2012, the version that we're using in 2016. I don't know a serious pollster, Republican or Democratic, who believes
Bob,
this.
that's a different question.
I know a lot of Republican
agree,
strategists
Bob,
who say it's just wrong.
But, Bob, you agree that in the Jesse Helms, Harvey Gantt, North Carolina Senate race, Helms won, even though Gantt was doing well in the polls, because people wouldn't say they were voting for Helms, and then they did.
Oh, sure. We had two phenomena like that in my lifetime.
Right.
That was one. The other was Tom Bradley losing in California.
So do you think it's possible that exists in this race? Possible.
But we didn't have, in those years, internet polling. We didn't have the capacity for people to answer anonymously. They can answer anonymously. No one knows who they are. There is no element of shaming. That's why the polling experts say this is a crock. It's just not happening.
Anthony, in the last couple weeks, every day now we see Trump advisors saying we want him to talk more about policy. You've said it too. And every day, almost every day, and even if he does talk about some policy, he talks about other stuff.
Listen, the thing that brought Mr. Trump to the table is his non-political status. He's a non-politician. Right. And there is 60 or 65, let's go with Bob's polls, 65 to 70% of the people don't like the direction that the country's going in. Is that not true?
No.
Okay. So the point that I'm making is that he got here to the dance the way he is. Yeah. He's 70 years old.
This is the way he'll finish.
I don't see anybody changing him, and it'll be up to the American people to decide what they want.
I was shaking my head at the control room. Anthony, thank you very much. Bob, thank you.
Thank you.
Make sure to check out Anthony's book, as we said, Hopping Over the Rabbit Hole. Bob's got a book, too. It's a memoir. I recommend that one as well. Up next, we're going to talk to Sheryl Crow about what she's trying to change about our future presidential elections. If it makes her happy, can't be bad, right? We'll see right after this.
Here on With All Due Respect, we love interviewing candidates, surrogates, journalists, and, of course, award-winning singer-songwriters. Right now, we're joined by Sheryl Crow, the founder of the Make It Short campaign, which is trying to limit the length of election cycles. We got a feeling you're not the only one, Sheryl.
Nicely executed,
Thank you for
John.
being here. I got my question here. It says all you want to do is shorten the election season. There's a whole thing here that I'm not going to do. But why?
Thank you.
Why do you want to do this? Why does this matter?
Because I have 2 young boys. I've spent a lot of time in the last 2 years hurtling over the couch to make sure I get to the remote control before they land on something that I don't want them to see or hear.
By which you mean some Donald Trump rhetoric? Kind of thing you're thinking
I
of?
just think it's been a really divisive campaign. Lots of hate speech. Kids are very privy to that. In fact, one day my 9-year-old came home from school and asked me if I would be voting for the liar or the crazy man. And I grew up at a time when I feel like the office of the President of the United States should be an office that's respected. What's happened in the last 2 years is not any more informative than it would have been if it had been a year or even 6 months. We're not learning anything new today that we would have learned 6 months ago. So I feel like we've got to use some ingenuity. We've got to pull our major 2 parties together and talk about a way to reform the situation. And I know that I'm not the only one that feels this way.
So let's say Hillary Clinton wins, and the day after the election, Ted Cruz says, "I'm going to Iowa and New Hampshire."
And I don't doubt that he will.
Yeah. How do you? Yes. How could you stop that?
I am in the long haul. I'm in this for the long haul. I want to see people really use their voices. I want to see people sign our petition and take their voices to Capitol Hill and do something about this. I don't think there's anyone that thinks that this is a healthy situation. The kind of hate rhetoric that we've seen has been really damaging to the political process. And I think there's a way, if you look at other countries, to create a process that we could feel proud of. I mean, other countries have much shorter political processes. And with social media and all these formats for news and information dissemination, we have to be ingenious about this.
So you got Canada just had its longest election. It was like 11 weeks, right? You know, the British election systems are famously, they call it an election. You have a few weeks of campaigning, and then it's over. A lot of people find that appealing. Here we have the First Amendment, right? Where you're allowed to basically say whatever you want, including buying commercials, go around the country. So even if you shortened the system, the American system and said,
Right.
let's have it look more like the British system. Again, to Mark's point, how could you stop without violating the First Amendment? How do you stop candidates from doing whatever they want? If they want to campaign until the next election and go out and spend money and travel around the country, how can you stop them?
Well, I'm definitely not a policymaker. I don't want to infringe on freedom of speech at all. When I was a kid, our curfew was set at 10:30, and I would always say, Dad, I want to stay out. Nothing good happens after 10:30. I mean, this is how I feel about this. If you want to go out and spend a ton of money and throw your name in the hat for this length of time, I think it undermines your message. We've gotten so far away from issues as it is that now it's just entertainment, and certainly no one benefits from a 2-year election except for maybe media outlets and marketing people who work on elections.
I bet about $1 million you violated that curfew, about $1 million.
I was a really good girl.
We're resisting the urge to point out you'd be putting us largely out of business if this happened. So you got.
I know. What are you going to do the day after?
You got a petition. What else? How else do you envision this actually happening besides people signing your petition?
Well, listen, I'm a mom. I'm a mom of 2 kids. I know I'm not the only one that feels this way. There has to be a way for us to put our minds together and look at the primary season. We can't put all the primaries on one day, which was one of the original ideas I had. Hey, let's shorten it. Right. But then we would lose people like President Obama if he were up against someone who's self-funding. I would like to see a day off for everyone, including schools, where we go and vote. It's more fair. There are a lot of issues with our election that could be fixed, and maybe it's time to look at some of those things. But 2 years is too long, and I think the climate that it's created has just been extremely damaging.
I don't have any doubt that a lot of other people feel the same way you do, especially after this campaign. But do you think this is just kind of an artifact of the Trump-Clinton election? I mean, did you feel this way about the Obama-McCain election 8 years ago? Boy, I wish that had been shorter when Barack Obama was coming up.
I'll tell you, the last election, that was the first time I'd seen campaigns of real hate rhetoric. And listen, I sound like a dinosaur when I say this. I grew up with Walter Cronkite, like 6:30 News. I grew up with the debates. We had many less options for finding information. We had newspapers and we had the evening news. And we sat around and we had conversations and we talked in our communities. It was much more civilized. I don't think that we're learning anything more by it being 2 years than if it were 8 months.
Of all the songs you've written and sung, which is the one that most applies to this election?